How weak do you think the euro is going to get from here?
You know, we look at, for the euro, there's three main drivers this year. There's policy, there's politics, and then there's the refugee crisis in aggregate. And they're all kind of interrelated. You know, broadly, the Brexit and the refugee crisis shows up in risk premium. It shows up in the peripheral bonds. They widen out, and that tends to strengthen the euro. And we just talked about China. We think it's one of a period of stability, but if the weakness comes back, euro also trades as a defensive currency, so it also tends to strengthen. And then you have the ECB policy, which is generally going to be cutting rates, expanding QE, and that tends to weaken euro in aggregate. So it's a very difficult directional picture. In aggregate, we really see the euro as one as it's weakening, but the path to it being lower is actually quite volatile at times, and it depends on domestic and global dynamics. You know, as a baseline view, we see it trading below 105 and towards parity by year end. But like I said, the path there is neither straight nor direct. And the ECB is important this week.
Do you think the ECB, the ECB sets policy this week, of course. Do you think they do they want to have a weaker euro? Is that a conscious choice? I mean, at the G20, we had these various governments saying that they're not going to engage in any kind of devaluation of their currency for competitive aims. And yet Mark Carney just recently commented that when you see negative interest rates employed, if certain criteria are in place, then he says the big impact coming through in currency markets. So what are they trying to achieve with this negative interest rate policy? Is it about the currency?
I don't think it's directly about the currency, but I don't think the ECB wants to see a stronger currency at the same time. When we look at the FX, it really feeds into the monetary conditions index, and the real effective exchange rate is a key driver of that. If you get a stronger euro, naturally that's just going to tighten policy across Europe, and that does go against the ECB's kind of intentions and their underlying policy. So I don't think the exchange rate's a target for them, but certainly a weaker euro is better for the policies that they're trying to put in place than a stronger one at this stage.
Yeah, and they don't want anything to undo the work they're doing around the deposit rate. I've got a chart here of the ECB's deposit rate, how it's come down since the financial crisis, of course, and now firmly in negative territory, but just drifting slowly into further negative territory. A little bit of disappointment around the meeting in December. What are your expectations for this week?
You know, I think the market's cautious going into this meeting. Certainly the disappointment in December, it still tends to overhang sentiment surrounding it. You know, in-house, we expect them to do a 10 basis point cut. We expect a nominal expansion of QE, I think of $15 billion for a 6 months period of time. So to a large extent, an extension of policy. But really what the markets want to hear about is how do they address these twin risks that Europe now faces. We have risk premium getting priced into European assets, and that's to do with Brexit or the refugee crisis and the spread of peripheral bonds to core. And at the same time, you have weaker banks across Europe. So it's clear that the ECB policy, just going the monetary route, can't purely focus on asset purchases and lower rates in aggregate. It does have to do something to help to support banks or stimulate growth.
And what else do you want to hear from them then? Do you want to hear talk of unconventional policy and the types of assets, or a reminder of the types of assets that they can buy at the ECB, or do you want to see them ditch the capital key so they can go around buying on their bond buying program, buying more freely the things they want to buy rather than the things they're sort of straitjacketed into buying?
Sure. I think ditching the capital key is too high a bar to expect on Thursday. It's something that we're looking at, and really what we would like to hear is it's clear that there's just not enough being purchased of the peripheral bonds or the bonds that need to be, hence why their spreads are widening out and that risk premium is getting priced in. So you have to find ways to address that within the market. And that collapse of the peripheral spreads towards core does help to weaken the euro in aggregate. But really, we also need to see kind of, lending operations which are going to be more supportive to the banks.